What's going on, everyone? My name is D. Anthony with evolutiontraders.com. I run a community with like-minded traders, realistic traders. I'm not here chasing the hot stock of the day. I'm trading, predominantly the same 5 to 6 ticker symbols and names each and every single day. I'm a high beta trader, options trader, which means that I'm going to predominantly be trading stocks located within inside the triple Qs, things like Tesla and Apple, Amazon, for example, Nvidia, AMD, so forth and so forth. Those are the names that I like to trade. They are very, very liquid. They move extremely well, and they tend to trust technical analysis better than some of the other smaller cap names out there. Now, not to say that you can't trade the smaller names or you can't trade things with inside the Dow or financials or any other sector, consumer staples or what. It's just what I like to trade. So first and foremost, if you are a losing trader, take a look now at some of the names that you are playing. Are you playing names predominantly in the same sector? Are you playing names that are predominantly going to move with each other? If you're trading financials and then you're trading tech and you're trading consumer staples and you're trading oil stocks and energy stocks or utilities, and you're wondering, why your win rates or your P&L is very inconsistent, it's because you're all over the map trading a bunch of names from different sectors that are going to be, some names are going to be a little bit stronger than others. Some names are going to be on the decline. Some names are not really doing anything, and you're kind of just picking and choosing. Versus if you just kind of stick to one body of names, if your stocks are down, the bias should be short. If your stocks are running, then you should be going long. If your stocks are choppy and going sideways, then you should be range bound trading those stocks, shorting at that supply, kind of selling for profit in the middle, and then kind of rebuying at demand, selling back in the middle on the dead cat bounces. And then until one of those levels breaks, right, one of those macro levels, either to the top side or to the downside breaks, then you can kind of ride the trade for a little bit longer, push a little bit more risk on. A lot of times traders don't understand that, and they're kind of trading, oh, well, this stock looks good today and, you're long. Oh, well, this other stock over here, everyone is shorting. And then you're kind of going one way and then you're going another way. And then at the end of the day, you're kind of looking at your P&L, excuse me, or you're at the end of the week kind of looking at your P&L and you're kind of like, wow, I took 25 trades this week, and I lost money. And I won on all of my tech trades, but I lost on all of my utilities trades. It's because you're not really focusing your energy and your time and your research and your technical analysis and working your strategy in one particular sector, right? One of the next reasons why so many traders find it hard to be consistent and successful, simply is because you cannot stay focused for long enough to give something enough time to either work or not work. And if it's not working, try to, identify those problems and kind of see where you need to kind of fix yourself or your mindset or your strategy, tinker with a little bit to kind of be successful. Most traders, take a trade based on what they hear from someone else. And then if it doesn't work, they're back to ground zero. And if it does work, they're always kind of looking for, that advice or that next name that's going to get them to that next level. It doesn't really work that way. If you can't find stocks and you can't find setups doing your own due diligence and your own research, you're never going to make, have a long career in this business. And if we kind of just look here, I'm going to give you an example. We're just looking at the triple Qs ETF, which is mega cap, the NASDAQ 100. We're looking at the 1 hour time frame. I teach a few strategies that I like to use on a day in and day out basis. One of these strategies is just going to simply be using previous day's high and low, pre-market high and low, and it's also going to be using the 20 SMA. What I'm looking is for those reversion trades where we're kind of either trading above or below the 20 period moving average, and then we kind of reclaim that area, right? So there's a change in momentum, there's a shift in bias, and then I'm kind of looking and waiting for that confirmation and kind of taking those scalps off of that confirmation. Now, 90% of the time I'm going to be day trading options. So even though I'm looking at the 1 hour chart where technically I could look to use the 1 hour chart to kind of swing trade or hold these long day trades, all I'm really looking to do is look for these setups on the 1 hour time frame chart, and I'm looking to kind of get in and scalp those 1 hour moves. Okay, so I want to be in and out most of the time within 1 to 2 hours. Okay, It's very rarely, unless I've got a good winning trade, 30, 40, 50% trade, and I kind of have sold that position and locked in those profits, and then just kind of holding a few running contracts to kind of, let those run to break even, set a stop loss at break even, and then kind of just let those remaining contracts do their thing. Sometimes they end up going for days or weeks, and sometimes you get stopped out within a matter of minutes to hours after the move has already gone. But the main thing is to be able to sell, to be able to sell consistently for profits without being greedy. That's, kind of the third thing. A lot of traders are so greedy. So, for example, you identify a setup, you get into a trade, the trade goes in your favor. Maybe it's in 1-2 minutes, 5 minutes, maybe it's within the first hour. That trade goes in your favor 15, 20, 23%, 25% on those winning contracts, and you don't sell. Okay. Now, what I'm going to be doing a lot this year is getting into the mindset and the psychology as to why you're not selling those winning trades. Why are you not selling those losing trades? Okay? Because majority of the time you're not selling the winning trades because you're trying to squeeze as much water out of that rock as possible to try to stretch, those wins. And the only reason why you're doing that is because you're greedy. Okay. The only reason why you're doing that is because you necessarily maybe don't trust your strategy or the setup that allowed you to take that trade. And you're trying to make as much money as possible on that one trade. If you kind of shift your mindset into thinking, because you've done enough back testing on your strategy and you've seen it work time and time again, and you have enough information and data, what does it matter if you're selling for 20% win rate or 40% win rate? If you can consistently find those setups based on your strategy and your risk management, that's going to allow you to take those trades when they present themselves to you that are going to consistently give you 20% wins. Okay. So for me, being predominantly a scalper, using the 5-minute and the 1 hour time frame, if I can find trades on a day in and day out basis in the sector that I like to trade, which is the triple Qs, and I know for a fact that I can find 1 to 2 winning trades that might pay me 15%, 20%, 25% in a matter of minutes or an hour, and I can consistently do that at around a 60 to 65% win rate day in and day out, why do I need to stress this, for example, one trade where I'm at 20% win and I want 40 or I want 50? Okay. What's going on in your head as a trader if you're up 25%? Now, don't get me wrong. Sometimes you get into a trade and it just goes. You go up 20%, 25%, 30, 40, 50%. It just kind of does its thing and you really don't have to do anything about it. What I'm talking about is those trades that you get into where you kind of get in the move. If, let's say, for example, you get in long, kind of puts in a new high and then starts to back test, goes a little bit sideways, and then it goes up again and you're up 15%, 20%, and then it's kind of just going sideways. It's at that point in time, that moment, those trades, I'm asking you to think in your head right now, why is it that you're not selling that 20%? Because you have to be confident that you're going to find another one. Whether it be today, tomorrow, next week, you're going to be able to find another one. As long as you're using a strategy that's been back tested, as long as you're using a strategy that provides an edge, which 99% of the strategies, whether you're trading RSI, you're trading the 21 EMA, you're trading the 20 SMA, you're trading, the VWAP, whatever it is that you're trading high of day breaks, you're trading pre-market breaks, pre-market lows, whatever, right? Previous day lows, it doesn't matter. There's so many different strategies out there. Each strategy is going to provide its own edge. The problem is that traders, they don't stay focused long enough. They want to just make money fast. They want to just make as much money as they can. And I'm here to tell you that it's not about that. It's about being able to identify these setups day in and day out, quarter after quarter, after 100 trades, 1,000 trades, 2,000 trades, 20,000 trades. If you can consistently find setups that can pay you 15%, 20% on your money, on your investment more times than not, that's an edge. If you can find those trades where you can get in, whether that trade lasts 1 minute or it lasts 2 hours, if you can make that 20%, why aren't you flipping the light bulb? Why aren't you flipping that switch in your head to say, hey, I understand that maybe I could squeeze 60% out of this trade, okay? But I also understand that I can find another 15 to 20%, 25% winner later. I can find one tomorrow. And instead of trying to squeeze for that 50% and then giving back all my profits and breaking even, or sometimes losing on it because I was just too damn greedy and I wanted to make more money, when realistically, I'm just using 20% as an example, but I had 20% win rate an hour ago and I was too damn greedy and I wanted more. Myself, I understand my strategy and I understand my edge. I understand my emotions, and I also understand that I can pick my spots and find those winners on a day in and day out basis. Now, will you have those days where maybe you take one or two trades and they just don't go your way and you do lose money? Sure. And you have a red day? Of course. But it's also at that moment where that shouldn't excite you. That shouldn't make you anxious. That shouldn't make you upset. Because if you have full confidence in your strategy and you have full confidence in your discipline and your risk management and your psychology behind those losing trades, you understand that you're going to make that money back tomorrow, or you'll make that money back this week. It's all about staying power and being able to take the trades on the next day. The last thing you want to do is come into the market with a $5,000 account, push $5,000 to the middle of the table, lose $4,000 and now only have $1,000, and now you're technically out of the game, right? You're technically out of the game. You're not going to be able to take as much size. You're not going to be able to take as many trades. Okay, I hope a lot of this is making sense. I did want to make this video too long, but if you did gain any sort of value, or you did want to learn a little bit more about how to kind of rewire your brain to be a little bit more consistent than you were in 2022, definitely join the Discord. Definitely link up with myself and the crew. I offer a ton of coaching that you guys can find very, very beneficial. A lot of it is stuff that people don't want to hear. It's the things that you don't want to do. Hey, for example, I'm just going to use Tom as an example. That's just a name I thought of in my head. Hey, Tom, you're at 17% winning percentage on those contracts. Sell them. You're coming into supply. Sell them. Why is it so hard for sometimes people to click the sell button at 17% win rate? What's the first thing that comes to your mind? Maybe it's going higher. Maybe I can make 30%. So you hold and the market goes sideways, and then it puts in a little high and kind of fakes you out on a high wick and then comes all the way back down. Now it's not a 17% winner. It's a 17% loser, or it's a break-even trade. Why didn't you just sell it the first time around? So it's really getting your mind, okay? It's really training and disciplining your mind in the way you look at things, in the way you approach the market, that is going to make you consistent. It's not about reading technical analysis. It's not about the lines on the screen. It's not about the moving average. It's not about what CNN said. It's not about what Jerome Powell is talking about. It's not about the interest rates, okay? It's not about the CPI data numbers. Those are all going to move the market up, down, sideways, or in between. What we want to work on is the psychology, so that when it is moving up, we can take advantage. When it is moving sideways and everyone is crying and complaining about chop and getting stopped out and this, that, and the other, we can take advantage and make money. When the market is down, now, as long as you're not a long-term investor where you're holding, stocks for a long time, and you are in the trading kind of realm, you will be able to make money when stocks are going down. You will be able to make money when stocks are going higher. But if you don't understand what it actually takes to kind of master and rewire your brain to be able to click the sell button on a winning trade and click the sell button on a losing trade, you are never going to be consistent and profitable down the long run. You are always going to be what I call a scratch trader. Now, a scratch trader is a trader who, gets into a trade. You win a bunch of money on one trade and you're always kind of chasing that next winning big trade, and then you kind of give it all back. Or a trader who maybe, makes a few $100s on this next trade and then loses a few $100s on the next trade. And then maybe you make a couple $100s on the next trade, and then you give back, a few $100s on the next trade. You're kind of always just rowing that boat, but never actually moving anywhere, right? You're kind of going against the tide of things, right? That's a scratch trader. You do not want to be a scratch trader. You want to be a consistent trader that's able to trust their strategy 1,000%, whether that next trade you take is a loser or a winner, because automatically up here, you know that you have the capital to be in the game for tomorrow and the next day and the next day and the next day. And you also understand that your strategy has an edge, that even though, let's say you take 2 losing trades for $100 each, your next third trade can be a $450 winner, right? So even at a 33%, 45%, 50% trader, you can still be profitable if you have that risk management, if you have that psychology that's going to actually allow you to be profitable. Not putting $1,000 into options premium, it goes down 20, 30, 40, 50, 60, 70%. How many of you guys have been there where you're in a trade and you're inside your head, you have such a strong conviction and strong bias even when the trade is going in the opposite direction? Okay? How many times have you been in a trade, it goes in your favor for, let's say, 5-10 minutes, and then the next 3 hours it's just going against you and you're still holding that losing trade? What is going on inside of your mind? Okay, what's going on inside your thought process that is not allowing you to sell? Okay, that's what I want to help you with. What's not allowing you to take that loss? And I'm going to be the first one to tell you, you do not trust yourself and you do not trust your strategy. Because if you did, like for example, I can take a trade right now that, let's say the trade fakes me out, goes against me, I can sell it for a loss, not emotionally feel anything. 2 hours later, find another setup, get into that same setup and take it for a nice ride. Not only make my wins back, either break even or make my wins back and become profitable on the other side. Why can I do that? Because I don't have that middle filter. I don't have that middle kind of feeling like, well, you know, if I get out of this trade now, I'm going to take a $250 loss, and you know, I don't know if the next trade I'm going to be profitable, so I could take another loss. You're worried about too many outside elements other than just trading the price action and other than just trading the setup and the strategy. You have to ignore all of the bias. It's okay to have a bias, but you have to be able to adapt and flip that bias if things in the price action change. And a lot of times people have a hard time flipping the bias and or letting go of the emotions of what you thought was right when you were in the trade. I hope that makes sense. My name is D. Anthony. Again, my website is evolutiontraders.com. You can become a lifetime member. It's going to be the top banner up at the top of that screen. If you would like to just join the Discord, make sure to join the Discord. That link is down in the description box below. I will see you all in 2023, and we are all going to be profitable together, and I will help you get there by being able to attain the mindset that you need to actually get there. There's a lot more that goes into trading than just looking at the bars on the chart. There's a lot more going into trading than understanding what a bear flag and in head and shoulders is. There's a lot more that goes into trading than knowing what a morning star reversal candle is. Okay, there's a lot more that goes into trading than just what's on the screen. I hope that makes sense.